Hi and welcome to Penser Bank and our analyst presentation of Tempest Security. My name is Markus Almerud and I'm an analyst here at the bank. So Tempest Security is the third largest guarding company in Sweden and the largest personal protection company after the police and the military. We have a fair value range of 55 to 57 Swedish krona and the share is at 17. So we're here today to highlight the discrepancy between the earnings trend and the share price. Momentum remains good, and I would like to highlight the market, momentum in sales, and the margin trend. So starting with the market. So we've seen several years of deteriorating perceived insecurity in society. And last year with the war in Ukraine and the spiral of violence throughout last year have brought these perceptions to an edge, we think. And on the back of the heightened geopolitical tensions, defense appropriations will multifold in the coming years. And at the end of last year, beginning of this year, we saw an unprecedented acts of violence, deadly violence in the society. And on the back of these trends, we think that the market for security services will remain good for the foreseeable future. Looking at Tempest, they posted double-digit organic growth for the first 9 months of this year, or of 2022, and they posted 29% overall growth in Q3. Looking at annualized sales, were 400 million in the quarter, and on a run rate basis, they were closing in on 500 million SEK. Put differently, the pace toward the targeted 1 billion is relatively steady. When it comes to the margin, this has been a key focus for the new CEO, and EBITDA has continued to recover in the past quarters. And it looks like the annualized margin has definitely turned a corner, and I think this is important. So the margin target is 10%, but the annualized level is about half that. So there's plenty more to go. So how do they plan to reach this target? Well, we think it's all about mix. Risk Solutions, one of their business areas, is currently about 30% of sales. But the target is for this share to go to around 50% of sales, and this will drive the margin. Keys for this is expansion in the US and acquisitions. And this is why the takeoff in the US, which we have seen in past quarters, and in Q3 in particular, is very, very important. And when it comes to acquisitions, there have been fewer than I may have hoped, but this is how it is with acquisitions. So the conversations with potential targets do not seem to have slowed. So I'm confident that we will see more acquisitions in the recent future or in the near future. So in summary, sales keep growing and the margin seems to have turned a corner. 12-month forward EPS keeps rising and the share doesn't perform. So the correlation between these two is very strong over time, and we believe that one of these two will have to give, and we think this will be the share. Thank you.